welcome to you. Biggest take-up from where you sit to that action overnight?
Morning, Carson. Yeah, no, absolutely. It does seem like Ben Bernanke's speech there, and obviously the FOMC statement really hit the sweet spot for risk assets. Of course, it's been a long time coming, and it seems like all week we've been ticking off all these boxes, and obviously markets had to get over a few hurdles to clear the path for an early Santa Claus rally there. So it certainly seems like we've kicked off from the right note. Obviously, we saw that broad move up in risk currencies, particularly the euro trading momentarily through 130, the Aussie dollar sort of lunging through 1025 to test those August highs. So it certainly seems like we're on the right path at the moment. But of course, there will always be that fear that markets have overrun themselves. So probably buying into weakness or pullbacks is probably the preferred strategy at the moment in the risk space. Risk assets have had a pretty good run over all week, particularly following that ECB announcement and leading up to the FOMC. Although we've been pretty flat over the past couple of sessions, overall we've had a broad move higher. For the Aussie market, we're eyeing obviously that 4,400 level today. We've kicked off on another good note, up about 1.1%. Last I checked to about 4,385. So it seems like a lot of investors feel that the path is clear for a move higher, but we might see some just thinking, hang on, let me wait for a slight pullback before getting back into any trades.
Talk to us then how this is going to, I guess, filter through to trading locally, because we know certainly we're seeing commodities higher as a result of that. We know the Australian dollar is doing well, the risk currency as it is. I mean, all in all, I guess it's all right to stabilise to a degree the world #1 economy because it filters through to that larger macro global growth picture. But on a more intricate base on the local market, where do you see the biggest sort of benefits in terms of sectors and in stock specific even?
Yeah, absolutely. The resources or materials space is back in pole position. We've seen this morning already some pretty big gains, particularly in the gold miners, especially that mid-tier space with the likes of Medusa, I think was up about 11% last I checked. Newcrest, which is obviously the biggest one, is up about 5.3%. So it certainly seems like gold will lead the rally at the moment. With the iron ore miners, iron ore retreated over the past 2 days, but they're still up today. Apart from Fortescue, of course, we've got BHP and Rio up about 2%, and even bigger gains in the mid-tier space like Atlas Iron, which are doing pretty well with gains of around 5% as well. So I think this will be a resource-led recovery. Obviously, they've lagged the market most of the year, and it seems like if any money has been coming off the resources, we could start seeing that rotation back into the resource sector. We've got the rare earths miners doing fairly well as well today. Obviously, China came out with that announcement that they are cutting licenses for rare earths miners, so that will give them a bit of a kicker. We had Linus up around 3 or 4% earlier as well, so it certainly seems like that's the sector to watch at the moment.
All right, Stan, thanks so much. Really appreciate it. Have a great weekend.
Thank you.
All right, let's get some more of this story. Of course, John Noonan is from Thomson Reuters. John, welcome to you. One